Welcome to TradingNBA.com. This is John's reports for the 15th of April. Keep pushing to the new highs, no surprise. I mean, everything we were seeing was still positive. Well, both from a DOC standpoint with the red even rising. We had green, meaning midterm buyers over cyan. Very powerful when you have that, especially on a daily significant. And then we had also the rising short-term buyers with steel, and that reset we already knew was going to push towards new highs, so not a surprise that we broke through that 2900, and usually you get to about the 29, 25 or 30 range, and then we'll see if there's going to be some retracement back into the overall breakout. But this is getting very close towards our ultimate highs, and getting, we're not at the 3000, but it's certainly getting closer than it's been in a few months, ever since the cataclysm at the end of the year, where everyone thought the world was ending. And it was close. The Fed really was getting out of control for no particular reason, and really tried to shut things down fast, and that there's been at least some abatement of that has allowed things to at least stabilize and continue. If not, still a little weaker than it would have been, but they'll argue that forever. So here we have the NQ NASDAQ doing pretty much a little bit weaker. So we've got a little bit of an inversion from what the S&P is doing. Anytime I get these kinds of divergences, it's always a little bit more disconcerting, in the sense that because you have these polarizations, meaning the readings here have been exceptional for the NASDAQ going forward. They really aren't producing the exact same as the S&P is right now, which means that you're likely to see more of a lag from the NASDAQ, which could in turn impact those positive readings from the S&P. So it's worth noting. It's something to pay attention to. I'm not going to be hyperly bullish, in the sense that if I see sell signals, I'm certainly going to be more prepared to take them. Now, this pop in the euro is certainly bolstering the whole construct of the S&P, and it started back here when we first had this original pop back, coming off of what was a pretty decent sell signals, kind of obvious, coming off of this dip below the red line. We ended up producing it again at the lows, but it happened within a okay buy signal. The problem with this is, without the steel reset, probably likely to hit up a wall here at the 50% of this move and come back down, and that would put a little bit more pressure on, at least it gives a much bigger stimulus to continued bounce for the S&P. The same thing happened right here with gold, except for gold had a decent buy configuration with the orange setup that you're going to see from the euro. That it can't get anywhere out of the range is just an indication that still isn't enough pressure on inflation and or the need for a safe haven yet, causing people to want to go. So this is what we ended up with. So we had that buy that was back on the Thursday. Took a little while to get going. Once it did get going, it was all clear. I mean, it was just boom, just rising gold throughout this whole shakeout thing, and it turned around from being in the deep red. The algo, the Deocon Paint 2 here, really identified it well and got right up to the peak where it was like, oops, now we've got a little bit of a problem. It was not horrible, because we have the red DOC this high up. You got quite a range to drop. That's why it's one of those where, even though I would get my signal somewhere below the ABM yellow, I'd be looking for any pop back up, because I'd want to be taking it closer towards the highs, just to minimize any potential new breakout from the upside. And interestingly enough, you had higher shakeout readings with the matching highs. It wasn't until you had this second attempt, little pop right here, that you started to see the breakdown take place, and literally you didn't even get magenta below the 13 until right over here, and you still weren't even at the 76, go figure, because it was that big a move and that fast. And when it did finally take place, all it did was we moved back down to the 2905 algo right there that we had previously, which was a fill of quite a few positive extremes, and you came all the way across to here. Still, there's a couple others that go from the original breakout, but even if you go to the secondary one, it's just a little bit lower, and that would just take you all the way just under 2900 again. So we'll keep an eye out for that one. At this particular time, once we get to the bottom, we ended up with new buy X signals right there at the 2905. That's always critical because you're looking at that from a significant algo standpoint, as well as just a regular buy configuration. So from that 2905, that's where we find ourselves right now. And it's pretty clean. If we look at the 50K, a little bit broader view of it, not as much happening there because this is the one where it had the very long, slow trade. And, we liked it from a little bit later on than the original program. Not a problem though. It repurchased again and still fitting with that. What was that repurchase? Was at 92. So not too horrible. Nothing extraordinarily special about it. And it's going to get tougher here as we get closer to the actual full highs, because we're going to have fewer significant points to reference. But that's where we'll just be relying on exactly what's happening from our DOC readings and that. And you can see there's a good number of points where we almost went positive extreme, and that's pointing to a little bit of softness here. We're going to be up here at the similar highs very quickly on significantly lower shakeout readings. So I might expect a little bit. And consistent with that NASDAQ daily, you can see where you could have some decent pullbacks into this as things crystallize. So there you have it, the long and the short. Again, I will put details up on the Skype chat as necessary. Trade well.